Alright, Bat Fam, here we are on the charts. No introduction in this video. We're just going to get straight into the examples here on how to scale into these breakout moves and into these trades to where you can get additional entries and in turn increase your profitability and get a higher risk reward out of your winning trade. So this strategy really works well on gold because gold is very volatile and has a lot of momentum when it moves. So this strategy works very well in gold, as well as NASDAQ 100 and GBP JPY, which is why I trade these pairs. The last video I showed an example on GBP JPY, and I will show another one on this pair on the price action that happened this week, as well as a gold signal that I called on the channel, and some examples on the NASDAQ 100. All right, now first things first, I'm going to show you an example that I sent a student of this strategy and basically showing him exactly what I did in real time. So here is a gold trade that I took when it was moving on the break of the support. I took one entry, then as it was working, scaled in with a few more, and then had my take profit set. Yeah, I had 3 total entries right here. One when it first was going, then I quickly added and reduced my risk as it was going. See, my stop loss was already break even really close once the price started pushing just like that. As you can see, that little minor, this is on the 1 minute time frame, but the little minor support broke and my stop loss were in profit above these candles here, trailing my stop loss. So that way, if there was a quick bullish movement, I would be out in a profit. And as so, it's continued to go down and it's approaching take profit, but did not fully hit, snap back up, and that's why I had a trailing stop loss. It's close and out. And this is what I said, this is how you trade momentum. So what else? Here's a trade on AudioST that I took, same thing, closed bullish. Once I got my confirmation, entered again, and then it literally just took off because this was a higher low point. Next comes a higher high point, especially right at this particular area. And yeah, this student's doing pretty well though. He started about 3 months ago, and yeah, made like a $12 trade this week. It's brand new to trading, so that's very cool to see. All right, so let's get into things real quick. So here's the first signal that I called on gold this week, and this is the first example I'm going to show. So here's the gold signal, gold buys, entry 1664, 1665, stop loss 1661, and the take profit at 1670 through 1680. Those are take profit 1 and take profit 2. Here was the trade right here, right where I'm clicking. So now I'm going to apply some technical analysis here. So 1665 through 1664 was right here. Where this blue line is, I'm gonna make this a dotted line real quick. And 1665 was right here. Now this little price range is where I call the gold signal. Now why is that? Okay, well, let's explain a few things. This little area was an area of support. And, oh, sorry, let me fix that. I have no idea what I just selected. Okay. And a lot of wick rejections here. Price came down, respected again, and had a strong bullish reaction. Now this to me indicates that we're about to push upwards. It's about to go bullish because look at this. Made a high, came down, multiple wick rejection, came down, hit again. If it was going to break and continue lower, it would never react with a bullish candle like this. It would just literally break, because with these momentum trades and when price makes a lower low point, it breaks cleanly. It does not have a strong bullish bounce like that. And I was watching this as well, waiting for these buys, and I think I did call them earlier, but we got out before it dumped down here and then entered again once price lined up with that original bullish bias that I had. So I'm going to apply the risk to reward tool. Let's just say you bought at 1664.50, right in between that price. Take profit 1 is at this black line, 1670. 1661 is where this risk to reward tool is going, right here. This is 1661 right at the bottom. Had at 1661 because if price broke below this low point, or I have this price range tool, if it broke below here, it should continue down to go lower, but that would be an invalidation of our trade, but that never happened, as you can see. But that is why I had the stop loss at that specific price. Next, let's say you entered right here and you're targeting this take profit. 1680 did not come through. It did come through on this move over here, but you would have got out 1670 or maybe held a little longer for these additional 60 pips and went for it. But realistically, to be safe, you may be able to close here or just a little beyond it. Okay, so you caught this one entry. Okay, let's go down the lower time frame. Now, like I said, you need a strong understanding of price action and market movements to be able to scale in and manage multiple positions, because you need to be able to think quickly, and managing multiple positions is more of an advanced skill set to do, because most people just take one trade, one entry price, and hold it until it goes to take profit. Okay, that's what you can do. That's normal trading. But with a defined skill set and a strong understanding of the market, you can literally take advantage of your winning trades so much more. You can make 2 to 3 times, 4 times more even than you originally intended to, simply because you know how to scale in and find additional entry opportunities and quickly manage your risk. All right, so let's say you entered, let's just say you entered your max risk here. You know, you're like, yeah, it's going, I have a point. Let's just say you put a 1 lot or a half lot, whatever it is, a half lot. So you're gonna be risking 30 pips, so $150 for potentially, for 60 pips, $300, okay? It's 2 to 1 essentially, and as price is going, you're quickly reducing your risk as such, which I did in this particular trade, but you're taking risk quickly off the table, so that way, you know, you're not going to lose nearly as much as you were originally intending, which is how you keep yourself in the game, by losing less. If you can lose less, you're going to be profitable in the long run, because your wins should outweigh your losses, and especially if you're trading this way and doing it right. Okay, so you entered here at 1664.50. You got this bullish movement. You're like, sweet, price is pushing our favor. Awesome. I'm going to reduce risk, which you should. At this point, you should definitely just move your stop loss below this candle even. You know, take some risk off the table. You really need to cut your stop loss. That way, once you do add additional orders, you're not going to lose as much. And 2, if something crazy were to happen, you lose less than you intended, and you can take the trade idea again if you get the confirmation, and that way when it works, you actually make some profit instead of just getting break even or making the losses back or being in slight loss still. Whatever the situation may be, you're still able to come out as a winner. So I'm going to add a dotted line here as the entry point, because I don't want a lot of risk to reward tools. You can enter right on this next pullback here quickly, because you have to understand, has the tool selected, 1 second. You can enter again and add to your risk and quickly move up your stop loss now, because now you have 2 positions. If you have your original entry point right where this risk reward tool is, at this point, once you see it push up like this, you need to go break even, just like that. No hesitation, because with this confirmation, with this price action movement, the way it's behaving, it should not come back down and take you out. It's definitely about to take off. And on top of that, this is a breakish structure, and this is a perfect place, perfect spot for these impulse entries and breakout trades, right where these points break. And these are the trades I look for a lot of the times, because a lot of times I don't always catch the wick or the low, but I see it's about to make a higher, make an impulse move, about to break out. So you buy at these points, and a lot of times you have minimal drawdown or no drawdown, and it just flies. And this is a very good strategy overall to include in your utility belt, so if you will. So now you have this entry point, price is pushing, you have this entry at break even. As it's pushing, you should move this stop loss up too. So I'm just going to add the risk reward too, so you can see it. So here's your entry point right here. Your stop loss should probably most likely be, where I would put it, is below this candle, below this previous candle, or right at where you had your second entry point, or your first entry point, sorry. Have the stop loss right where you had your first entry point, which is this risk reward tool right here to the left. This is why I didn't want to have all these tools, but regardless, entry right here, stop loss right at that entry, and that entry is also at break even. So you are risking the potentially losing the trade, some money on this trade still by the second entry, but you have all the confirmations, and given your understanding, this is how you take advantage of your trades and make way more, and this is how you outweigh your losses, by learning how to take advantage of your good winning trades, just like this. So as it's pushing, see that it's going, you understand impulse entries and momentum trading and breakouts, you take another entry here. Yes, you can literally take another entry on the break of this. Some people might be like, oh, this is over leveraging. Well, it depends how much you risked at the beginning at these positions. But also, yes, you know, a lot of these professional traders and understanding how to trade like this, they are putting a lot of size on. They have their full risk here, quickly manage their risk. They may have added 50% of what they had down here, or 25%, okay, intending to add more because they know that this is working out and that's what you should do. So they add another 25-50% here. So let's say you had a half lot like you had another 0.25 or a half lot here. Okay, so now you have twice the risk on, or 50% more, and then you can add another half lot or 0.25 here. So that way you'd have twice risk on, or 3 times the amount of risk on. But at this point, you got to be very quick to manage your risk, because as it's going, this stop loss needs to go up to break even. This stop loss down here needs to go at this price and be in a slight profit, so that way if you're taken out, you still made something on it. And this, if you entered on this one, this point, your stop loss needs to be, I'm just going to draw a dotted line. Actually, if you entered at this point right here, your stop loss needs to be at this price where you entered, or below it, just right below the wick. But you got to be very quick and think very quickly. And as price is moving and you have your risk managed, now it's just trade management, watching the trade play out. You can close earlier if you want, before take profit, obviously, because you have way more risk on, and the amount of profit you're making right now would be more than you already were intending for in the first place, so you can just close and not be greedy. Or you can watch the trade play out to your analysis and then end up making more than you originally were intending in the first place, and you really took advantage of your move. So that's one example on this gold trade, and I literally did this. I literally scaled in. This got me, if I closed early on it as well. I closed before the take profit point at like 1668 and a half, I think, or something happened. There's like about a volatility that it reacted from, and I was like, you know what, I'm gonna just close. Yeah, it was right here, 1668, something right here. Yeah, it pushed up and I saw this little pullback. I was like, you know, I'm just gonna close, because I had multiple entries, literally just as I showed you, at all these points, and then closed. But ultimately the price action played out, and if I would have held, I actually would have made, or hit my 20% target and made, you know, a few more percentage points. But it's all good. You know, at the end of the day, it's about making money in trading. Okay, so that's one example. And this is for a buy. This is just for a buy, just for a nice buy setup. You know, just learning how to find additional entry points in the lower time frame, along with your original analysis that you had, given the confirmations that, as you can see, higher high, higher lows, price rejecting off these lower time frame supports and just continuing higher. Next example is the gold cells that I had, and they were back. Where did I take these gold cells? It was essentially the same exact idea though, but for a sell. And you'll see that these type of setups and situations and opportunities happen every single day, depending where you enter and what type of trade setup it is, and given if it's a higher time frame or lower time frame trade, or if it's a low volume session or a high volume session. So for the gold cells that I had in that example that I showed on the Telegram channel, was this trade right here, I believe, if I'm not mistaken. Yeah, I believe it was something like this. Once I saw this point break, saw momentum going, and I was targeting, yeah, this is where I would have been taken out on this little pullback right here. Okay, yeah, this was the trade. I see it. So this little level broke, which is the point of structure, because this should have been a higher low point, and if the market's going to continue higher, it would not break this level. So I'm going to take it off from a dotted line to make it a solid line. So here we are. You can see this point of structure broke and continued down all the way to 1670, 1670.40. Oh, if you want to be specific, 1670.36. Okay. So here with the risk reward tool, this is where I enter the trade, and I will go back to the Telegram just so you can see for yourself. Once again, and this was right here, okay? Same trade, 1673, 1670.50, 1673.50. Here were the entries. Oh, you can't see where I entered. it's over to the left, but you see the take profit 1670.50, which it would have hit actually if I held, but I didn't want to be greedy and just take my profit. But yeah, as you can see, it would have hit. But anyways, this is the same exact setup right here. See, same thing. Again, let me do this right here. Same thing. Okay. So once it's broke, scaled in with momentum, quickly trail your stop loss to break even, because if it's going to go, it's going to go. As you can see, it went. But there could be little pullbacks, and depending if you scaled in or not on these lower time frames, on these lower time frame candles, it could be that drawdown could be pretty serious, especially if it were to come back. So you got to take what you get a lot of times. If you do this, that's what makes it a high risk strategy. But you got to be thinking quick and also not overdo it in case something crazy happens. Okay. So at this point, the market pushed for 20 pips, but it fell for a total of 35 from the break of this previous low point. So how could you have taken advantage of this? Well, as you saw, I added quickly as I saw the momentum was going and it was breaking. So you can definitely do that. Quickly increase your risk. Put just a small amount of risk on if you want it first, or your full risk, and then as you see it's going, you can literally just scale in with smaller entries or the same exact size, but that could be detrimental. So you got to be careful on that and probably refrain from doing that. But put your full risk on, then you can add another 10, 25% as it's going and continue doing so, but trail your stop loss as I just showed you in the examples that I sent my student. That's how you can do it and be safe about it. But when it works, it goes all the way down a lot of times, so you can just continue to scale in. But at this point, there weren't that many opportunities to catch any wicks, really, because in the last example I showed you on the first video, there was a lot of wicks, a lot of wick opportunities given on. On this, there was not that many wicks. There was just a lot of volume, just a lot of strong volume bearish candles. So really, on this one, it's hard to take advantage of. You could have used the 1 minute or 3 minute time frame and caught something like on these moves, or you saw that this was about to push. You could have added on this little break of support and just took another risk as well here. Stop loss where you had this stop loss at, because if it's going to continue going, it shouldn't come back. And then still targeting these lows, or the support, sorry. So targeting this level of support. And as you can see, price pulled back. So depending how you want to manage this trade, you could have closed when you saw this, trailed your stop loss like I did. You'd have been running 15 pips from this point, and you would have been running a total of 22 pips or something from this entry price. Yeah, so 20 pips from this entry price, 15 pips from this entry price. This is a good little scalp if you were to catch this and close, or trail your stop loss for if price retraces. Because on the retracement, a lot of stuff could happen. It could come all the way back up to entry and you get stopped out at break even, which is fine, but then you miss your opportunity to profit. So it really just comes down to your own judgment and trade management a lot of the times. But usually when you're fully scaled in, you're going to want to take your profits, because you're already making more than you were originally intending to with your original trade idea in the first place. Once that broke, there's little minor retests on the 3 minutes, and there's little shooting star candle on the 3 minute candle, so you could enter on that as well. Just keep finding additional entry points and quickly trailing your stop loss. You got to manage your risk very quickly if you're going to trade on these lower time frames and do this strategy. You got to think quickly, trail your stop loss, take your profits, and so on and so forth. Okay, but this is the example on gold. Now, if you would have waited a little bit, been more patient to scale in, or not been so aggressive to manage your risk like I was, because I was trying to secure the gains and everything. But as you can see, you can literally add on these lower high points as well, understanding pullbacks or retracements. So you see price push, you see a lower high point, you could have entered on this on the 15-minute time frame based on your understanding. Stop loss above, or stop loss where you had your first entry point and break even price, targeting the same level support, and price broke. You could also entered right on the break of this little minor support as well, right here. And I'll apply the risk reward tool. same stop loss, or you can put it at this entry point. This stop loss needs to be good at break even. Once it starts pushing like that and breaking below, this stop loss up here needs to be dragged up to this lower high point, or where you have this entry point. That way you're locking in gains and your capital's protected. You got to do this very quickly, very quickly and consistently. Okay, even if it's just a regular trade too, if you're not scaling it, you got to do this. You got to manage your risk and manage your trades consistently. Okay, so you're still targeting the same support. It hit. You have 1, 2, 3 additional entry points now. Let's say you had, a 1 lot right here. You caught a half lot, another half lot. Now you have 2 lots. Caught a 2 lot trade when you originally were intending to catch a 1 lot trade. Doubled your risk, made twice the amount you're going to make, and manage your risk just like a professional very quickly. That's literally how you do it to take advantage of your winning trades. Now, you have to think fast, like I said, and have a strong understanding of market movements. But once you get to that point, you can literally start taking way more profits from the market because you understand what's happening on a much deeper level. So now let's go to GBP, JPY, GJ. Here's 2 trades I caught this week actually, and they're the same thing, just momentum trades, and they took out the lows and continued lower. So here's the trade that I called during the live trading session for FOMC. It's at 11. This was it right here. Right here was when the FOMC statement was on this movement. So there was a consolidation, but overall price action is still bearish. We're below this level of resistance. We created a double top pattern at this level of resistance, and price is very bearish. Okay. Now I had called the trade like this, entered as such, and 1 second, that's out of control. Okay, that's stop loss above this point, and I also have this as a YouTube short and on my Instagram if you want to see it. But we did take this trade, and we were targeting this low point here, right here, and as you can see, it just literally broke through and continued to fall. This is a good little momentum breakout trade here. Now I'm going to go to a lower time frame. So I had a total of 3 entries on this trade, and I wish I had more, but I was looking at gold while this is all happening too, trying to trade multiple pairs. But sometimes it's just better to trade 1 pair, guys. Just focus on 1. So during the stream, I had said I'm going to enter right here. I didn't enter right there. I entered slightly before. I was like, there's a chance there could be some drawdown and hit this little blue area where this line is. There's a chance price could hit here because this is where the lower high point should come from, right? This level of resistance. So I entered 1 point here because if it's going to break, entered 1 point here because remember, if the low is going to break, it's going to break, and this is a good entry price. However, I did not put my full risk on just in case of some drawdown or possibly getting stopped out by volatility on the news, right? If I'm just wrong about the direction entirely. Okay, but that didn't happen. There was some volatility, but I had used just a small amount of my risk just in case, and that's what you guys should do as well, especially when you're scaling in before you know if the movement's going to work or not. Because if it is going to work, you can easily just increase your risk and add more entries, okay? But if you start small, your losses will be small. And in turn, once you catch the move, your wins will outweigh the losses if you do things right and consistently, okay? So we had the stop loss above this high, had an entry point here. I said I was going to enter once price hit this level, and I did. I entered right here. It was going. I entered again. So I had a total of 3 entry points. 1 where this blue line is, 1 like in the middle right here. I think it was a little lower. And 1 literally right after it reacted from here. So I had 3 really good entry points. I'm going to change these to dotted lines. 3 really good entry points, and I wanted more, but like I said, the momentum was really quick and I was not fully attentive once this broke. Because now, once this broke, as you see, I had multiple entry points where these dotted lines were. And, it's on the stream, on Instagram, I have a clip of it, and on YouTube Shorts as well, on my channel. So, as you can see, 3 entry points. I could have had more once prices broke this low point. Our take profit 1 was, I believe, right here. Yeah, right here. Right where this previous low point was. We were just targeting this level here. And so that got taken out. Take profit 1 was hit very quickly once the FOMC statement was released. Could have entered right here again, right where this blue line is, right on the break of that. You could add a 4th entry, 5th entry, however many entries. You shouldn't have too many though. If you are in the Telegram channel, the risk management guide literally says 2 to 5, 4 to 6 max, depending what account you have. It's a funded account or a personal account. You don't want to overdo it, but really you could have 4 or 5 entries on this one move, taking way more profits than you originally intended to, and just completely taking advantage of a winning trade. So now take profit 1 hit. I did not move my stop losses in this. I was ready to close and take profits or hit as well, but I was, actively monitoring the trade and was ready to say close or move stop loss and stuff and everything like that. But take profit was hit, continue to fall for an additional 30 pips, I believe, from this point. Yeah, 35 pips right after that. So this was a really good trade, but as you can see, if you start small and understand how the market moves, okay, if you put your full risk here, this might have scared you, and this drawdown could have been detrimental. You could have either blew your account, could have taken a big loss, or whatever the case may be when it comes to trading, okay? But my understanding and already having this, thought out ahead of time, along with my trade plan that I was already telling the traders who were on the stream, on the session, the Zoom call, that I'm entering a little bit of risk here. I'm also going to enter here price to react. The stop loss is here, so I'll only have a small risk if something crazy and I do get stopped out and it doesn't work. But if it does react from here, I'm going to continue to scale in and, take advantage of the trade as I did. Okay, so this is one way you can take advantage of those strong bullish or bearish momentum moves that you're catching if you catch the wick. Okay, as you can see, I caught the wick, and a lot of these smart money traders, that's all they're doing is just catching these wick entries, but they only have one entry point, and they're catching these good trades with a super tight stop loss with a good amount of risk on, but they can literally scale in on the break as well and continue to do so. And if you add this entry method to your trading strategy and really know how to take advantage of your trading of your trades and of your trade setups, your profitability can literally increase massively. Okay, and last example I'm going to show is the NASDAQ. NAS 100 was absolutely crazy this week. I need to show you guys a break of trend line momentum play here. And these ones are very good. So let me just, right here. These are perfect examples. So you know that the market is already bearish, right? And you know the market's retracing, having a counter trend. These break of trend line counter trend plays are very, very profitable if you understand them right. Okay, so now most people draw trend lines off the higher time frame with the overall trend. Yes, you can do that, and I do that. However, that is more retail based, and a lot of times those trend lines are taken out because everyone sees them. However, the probability is there to take the trade in line with the trend, so sometimes they do react perfectly from, but a lot of times they break through. But when you use trend lines like this for momentum trading and price action trading, you have to understand a few things. When price is trending, okay, it needs to either respect that line or break that line. If it breaks that line, the trend is over, okay? If it respects that line, the trend is going to continue. And that's literally how it works. It happens over and over and over, and literally you can just draw trend lines almost by themselves with no other information on your chart, besides a little bit of supply and demand if you really wanted. It's just understanding price action movements. It depends on your trading strategy, but look, these are just so clean. They're all over the place. All over the place. It depends on it has to be in a trending market though, obviously. If it's consolidating, you can't draw a trend line, okay? It has to be trending as such. If I could find one more here, and I'll go over both of them, but I'm mainly looking for where, instead of it breaking below, it breaks above. Let's just see. I need to find a downtrending area. Here we are. There's certain behaviors that the market has to do with these particular momentum trades with these trend lines, okay? But yeah, you can see another one go all just like that, so clean, and then broken, bam. Same thing. Okay, it has to be in a trending market condition, so because when it's choppy stuff, obviously you can't do it. But when it's trending and stuff, you can literally see these channels that price is respecting very cleanly from, and these are the conditions you want to be trading anyways. You know, these are the ones you could really take advantage of. But these normally happen in the middle of the week, like Wednesday, Thursday, Friday, the first couple of days of the week. You know, you might catch some clean moves, but this type of price action is where the money's at. So you see this was respecting very nicely. You know, you can just took sells, you know, on these points each time price respected, and you know, traded momentum and just got out when you saw the exhaustion or whatever you were doing. But when you see it break up like this, break through, and you know, the second candle is what's important, because a lot of times there's liquidity grabs or false breakouts. So it takes 2 candles for it to confirm. You can see this nice breakout candle right here, bullish candle, broke out of it, tapped it. Now you got to see either the next candles have to create a higher low or continue higher. So to take advantage of trades like this, there's 2 things you can do. Understanding impulse entries and momentum trading and breakout trading, you could just take the breakout right on the break of the highs and close when you see exhaustion, and your stop loss would have been either below this low point or just slightly below the candle you entered on. And that's a very tight stop loss, but it is possible. Okay, these trades work out all the time, especially on like the NASDAQ and gold. These pairs have a lot of volatility and a lot of momentum, and these are the pairs you want to do it on. And lastly, on this one you couldn't really have scaled in unless you got the wick here and you were understanding that price is going. So understand it's going up, you know, you're targeting, you know, this, let's just say you're targeting this high here, targeting this resistance here, and this is why you can use support and resistance for take profits. But that's where you're targeting. You took another entry right on the break of these highs. You could take in an entry on the test of this trend line, and at the same time you're managing your risk and managing your trades each time. Okay, now you cannot trade like this every single time. You need the confirmations for it, and you need to see the market trending strong one way or the other with a lot of momentum in order to scale in and take multiple entries on these trade setups. Not every trade setup you can do this on, and it depends on the market conditions. You need the right conditions to do it on. Okay, so let's go back to where we were at for these counter trend moves. Okay, now these ones are really, really good, very effective trades. It can go either way. It just, you got to watch how the price action is moving, because sometimes they bounce up and you can catch these nice wick entries once they kind of false break through, have little liquidity grabs through, and then catch a nice bounce. All right, so essentially though, for these trendline plays, you can get in on the break of the trend line, right? Stop loss above the wick, and it's going. This is a nice momentum trade. All right. Next, let's say you caught the top on this move though, right? You entered, you understand higher highs, higher lows, price reacting, definitely transitioning. You can see that the market is bearish and that a continuation is going to happen. So let's say you entered here, stop loss just above the high, and you're targeting this level of support overall, or just, you know, targeting these lows, targeting these previous lows back here. You're just trading the price action at this point, right? Entered here, see price breaking the trend line with a lot of momentum, enter again, and you have 2 entries here. Now we'll go to a lower time frame. Now to refine this a little more, you caught these little candles here on the wicks. This is a very good, very tight entry here. Your stop loss could have been even tighter depending how you trade. Now you caught the break on here, but as you're watching this lower time frame, you're seeing these candles turn bearish. You can literally take the entry right here, stop loss above this high. This stop loss would be moved above this high. That way, you know, if you get stopped out, anything crazy happens, that position's break even. You'll take a loss on this. You know, that's the risk you're taking when you're taking multiple entries. But if you see these big movements happening with a lot of momentum, personally, I think you should take advantage of them, because you found yourself in a good winning trade. You should really take advantage of it when you have the opportunities to do so. But this video's already gone long enough. I hope you guys learned a lot out of this. This is exactly how I trade right here when I get the opportunities to do so, and hope you guys learned a lot. See you guys in the next one. Peace.